I love our audience, never would want to stereotype any of you out there. However, I think it's fair to say that many of you may save and invest in, let's call it, more traditional ways. So advisors, brokers, banks, and trading platforms run by the big banks. But there is a whole other world out there, with adoption really being driven by the next generation of investors. And to explain the dynamics and how the barriers to investing are being broken down and the opportunities that presents, Brendan Malone, Raiz Invest MD, joins me here now. Brendan, welcome. Thank you.
Great to be here, Nadine.
Housing is expensive. Let's face it, everything is expensive. Has the sort of cost of living crisis been a bit of a tailwind for investing, savings apps actually like Raiz?
Yeah, I think since the cost of living crisis has just, the understanding of individuals has grown, and what we're trying to do at Raiz is educate them on the purpose and the reason of savings. And when you think of something like Raiz and the technology and people using technology to assist in, or lean on technology to assist in their savings, that's exactly what we're trying to achieve. And if you look at our funds under management numbers, people are saving more now because they've been educated on the process or the importance or the ease of savings.
Yeah, you're really at the coalface of this next generation, let's call it that, of savers and investors. So why do young people primarily invest? And is that at the expense of savings? I'm trying to understand the mindset, because when you don't think you're going to be able to get on the property ladder anytime soon, perhaps it forces you to think about things differently than previous generations have.
Yeah, I think so. And I think we've been operating 9 years now, so go back when interest rates were very low. Yeah, they're up high now, but we started in a period where you're not going to get the traditional interest rates that my generation would have got, or the generation before me. So they're looking for alternative ways, and there's a lot of massive movements out there, like the FIRE movement against these that run through these millennials about retiring early, but putting your money to use, or make sure your money's doing something while you're asleep. And that's something that has come through the customer feedback that we've got. They want access to things that they haven't been access to, and we talk about breaking down the barriers. What we do at Raiz is break down the barriers to something like the ASX. Mm-hmm. So you can get onto the ASX or into a portfolio of ETFs through Raiz for as little as $5. So they go, well, I'm going to give it a go. I'm going to try it, and they put their $5 in there. Then they put a recurring deposit on, or they're using roundups, so they can quickly see that small amounts add up over time.
Yeah, and your point is that this is fintech. This is largely being driven by the rise of apps. And this new generation, they're digital natives, right? So how revolutionary is this evolution, from brokers and advisors? Because just that simplicity of $5 a month, do it on your phone. I mean, it's got to have just, a dramatic effect across the whole investment landscape.
Oh, it's absolutely true. It's giving them access, and along with access, it's giving them hands-on experience. And when I say hands-on, it's in the palm of their hand. They can see wherever they are, if they're on their way home, if they're having their lunch break, if they're sitting watching the Netflix or Apple TV or whatever they're watching, they can see real time, and that's something that my generation didn't have. So having that at the palm of their hand, having the access to financial information, financial inclusion, and financial literacy is really making a difference for them, because once you give this younger generation, or the next generation of, say, advisor customers, or the next generation of paying advisor fees, they're getting their own education that's a lot more accessible now than what it was for our generation. So I think it's important for that financial planners out there to consider that, because they're coming in a little bit more educated, and I think the next generation will be even more educated when they're coming through that next level of advisors.
And you're presuming that they will go through the next level
that's if
advice,
they
or they become fund, they go to managed funds, or
exactly. And that's where Raiz's product offering is growing with those for that reason. Now, we give some customers some knowledge, and they want more. We put them through a financial quiz when you sign up for 7 days, and we get hey, where's our 8th day? Where's our 9th day? They want more because it's easy, accessible information in bite-sized chunks.
So innovation really is what's breaking down the barriers to investment, and super is a really good example of this. Is the next generation less inclined, because you've got some data, obviously, this is where you operate, less inclined to go with the default option or the big, industry super funds?
Yeah, I think, there's, with something like super, a lot of the generation now will ask the older generation, what should I do? And a lot of the older generation aren't aware of the new super funds out there. And if they say, hey dad or the tax accountant, should I go with Raiz or should I stay with Host Plus? The traditional default for their decision is Host Plus because they know of it. But what we're doing is having that in the palm of the hand so they can see their Raiz retail account, but they can see their Raiz super. And what we're trying to do is educate people on where their super is, make sure the employee's been paying. And I was on a webinar the other day with about 150 people, and one of the ladies said, but my employer told me it's not my super until I can't do anything till I'm 60. I'm like, no, you can put it into the portfolio or a different super fund if you want, because it is yours. So creating that availability and awareness.
Yeah, and it's not just funds, it is SMSFs as well.
Yep.
I was speaking with a group of advisors recently, many of whom, or I should say a couple who were unaware that there is this rise of the ability to create your own SMSF on the apps or to start an SMSF. It could be a bit risky for some, couldn't it, though?
It is, when we look at, so we've got a plus portfolio where you can fractionalise up to 102 ASX listed stocks, 48 ETFs, a 5% allocation to Bitcoin, or our own residential property fund. But say in the super space, and we've worked with the trustees on it to say we're not going to allow 100% of one single stock into the super, so that we can still, we force the individuals, if they do want to create their own portfolio, that it is still, there's that element of diversification.
But how about the other things that you have to do, housekeeping, when you have an SMSF, and I'm thinking about auditing and tax treatment and the like. Like, what is the responsibility of the app or Raiz to address some of these issues if the users aren't taking that on themselves?
Yeah, just because we do not set up the SMSF.
Okay.
We allow an SMSF to invest and have a portfolio on our side. So all the insurances, all the tax filing, that stays with the planner or fund accountant. We give them an opportunity to be able to get into the market through Raiz at a low cost.
Yeah, okay. So that's innovation. There's nothing, doing it through an app, it doesn't come at the expense of returns, does it?
No, absolutely not. We've had some strong performance in our portfolios, but it all comes down to the portfolio mix, whether it's a Raiz or another platform or another fund manager. You have to understand what you're investing in, and that's what we try and do. We break it down. We've got our standard portfolios from conservative to aggressive, and they're made up of the same 7 ETFs, and there's a lot of tutorials on our website, in our app. You push the AAA and it will tell you exactly what it is, because we want the individual to understand what portfolio they're going into.
Now, I perhaps was pretty naughty to say in our intro that I alluded to the fact that, many of our audience may invest in a more old school manner, but what is the actual demographics of the Raiz app tell you?
I think you're right, and we're going to celebrate our 9th birthday next week. So we've only been operating for this amount of time, and if you look at the tail, it does start. We've got our Raiz Kids platform, and we've got close to 50,000, just over 49,000 Raiz Kids accounts from 0 to 17 and 51 weeks or 52 weeks. Then it does go from sort of 18 to probably 26, 27, but then there is a jump from 27 to the early 40s. That's that. And you go back 9 years ago, they were right in the sweet spot of the millennials, the first adopters, the users of technology. That is our sweet spot, but we've got this next generation of kids coming through.
Yeah, right. And some older Aussies using Raiz.
Well, look, we have probably over 50,000 over 50.
Okay, that's a good number. So now that we're on numbers, you recently put out your second quarter business update.
Yes.
And so active customers, what are we talking now?
So at the end of December, we're up to 317,000 active customers. We've had a very good January. We've put out a new product because we're listening to our customers with something called JARS, where you can have a sub-account and you can set up specific goals. And so over to the 25th of January, we're up to now 322,000 active customers.
Okay,
so
and funds under management?
So active customers are up 8.5% over the calendar year, and funds under management up 32% to just under 1.7 billion, $1.67 billion of funds under management. So Nadine, it's important. Small amounts over time add up. Yeah. And that's what our customers are learning.
Do you have any sort of a target for funds under management?
Look, I think there's, I've made it very clear to the investing community through the AGM. My goal is to get the active customers to $500,000 and to get an average run rate of $100. And I think it's with that 1.6, we've got about 340 million in superannuation money, and the rest is in retail. And I think there's a real opportunity as we develop and improve our superannuation offering that super number should be higher than the retail money.
So the average revenue per unit is increasing. What what is driving that? Just to break it down a little bit more for me. Can it continue?
Yeah. Look, it definitely can continue because we're customer centric, so we're listening to what our customers want. That's why JRs has come out. So not only will it give them a different, another relationship with us, it will last. So we had a problem where customers would save to go to Bali. So they get their $1,000 and they go to Bali and they forget about it. But now they'll have a jar for Bali, they'll have a jar for a house or a jar. So we're keeping a relationship with them. So the ARPU over the last 12 months has been growing because we're putting the right product in front of the right customer at the right time. And that could be Raiz Rewards, Raiz Super, Raiz Kids, Raiz Jars now. So we're having a relationship, we're doing a much better choice of cross-selling now with using our data.
Yeah, really interesting. All the ideas that come out of the team. Now, here's one. Is Raiz profitable?
Yes, look, we put our half-year accounts out last year, but I was very proud of the FY24 results and sort of moving to a positive EBITDA, especially after we've cleaned up the business and sort of focused a lot more now on 100% focused on the Australian business. So just wait a couple of weeks and we'll see.
Okay, and talk to us a little bit more about what's on the agenda for 2025. It might be a little bit unfair considering you've just told us about jars and that just came out, but like what are you solely focused on? What's your mission this year, Brennan?
Look, there's some things that I would like to do, or the team would like to do from a customer user experience, and it's very important to keep innovating the app for the front end and for the customer, but you've also, I don't want to be a traditional old bank where we're getting bolt-ons and the back of house isn't done properly. So we're going to spend a fair bit of time this year on that, but I expect quarterly innovation and improvement for our customers because that's what they're demanding. It's better payment rails. There's I've mentioned some white label opportunities where we can work with financial planners and financial advisors to use the technology because it is low cost and scalable to help them engage with their next generation of customers or their existing customer base.
Yeah. Okay. We have a viewer question that's come in from Dean. What is the company's strategy for advertising now that the Seven West media credits have been spent? Maybe you could just give us a little background to that.
Yeah. So 3 years ago, Seven West Media Ventures had a placement with Raiz and we had $8 million worth of contra advertising for them. That was use it or lose it in the 3-year period. So that's all finished now as of tomorrow, 31st. So Dean, it is more, we're going back to our traditional digital advertising. That's what we've done, and we've spent a lot of time over the last 6 months making sure our systems are set up right to again put that right message in front of the right customer through the digital channels for not only a customer acquisition but also a re-engagement with our existing customers. So if you look at our funnel, we've got over 750,000 people have had a Raiz account at some stage, but 320,000 active. So there's a massive opportunity there that we're focusing on, as well as the new customer acquisition channels through social.
Okay. Look, there has been quite a lot of takeover activity in your space. Spaceship, South Wealth, Insignia Financial. Are you on alert?
Definitely on alert. Definitely on alert. And look, we've been looking at things both in Australia and both in the retail world and the super world for the last 18 months. I've got a very supportive board behind us that I keep having opportunities. They keep bringing opportunities to us. So we're looking at everything, and we know that people are looking at our financials and combing over us.